monetary tightening, recession whispers, volatility spikes. All eyes are on macro. What happens when policy shifts meet geopolitics and margin calls? Hormoz Faryar, Managing Director of ATFX Connect MENA, leads our deep dive with his panelists. Hormoz, I'm curious. How many times a week do your clients say, "What now?"
Maybe 5.
Okay, so we can wait to hear for your answers. Gentlemen, the floor is yours.
Thank you so much. Thank you, Despina. Thanks everyone for joining this panel. We got an excellent group of panelists. My name is Hormoz Faryar from ATFX in Dubai. And I just noticed for the first time I've been on these panels outside of UAE that the majority of us are from Dubai. Actually, 3 of us from Dubai and 1 from Cyprus. So I'm going to let you guys briefly introduce yourselves before I start.
Thank you for having me. My name is Ahmed Allam. I am a senior financial expert at His Highness Ruler Court of Dubai. I'm specialized in financial fraud investigation.
It's like, okay, yeah, that's better.
Okay, it's better?
Yeah.
Okay, I'm specialized in financial fraud investigation, specifically related to the virtual assets and the cryptocurrencies.
So Sheikh Mohammed's private investigator. But don't worry, he has no jurisdiction to arrest you guys here in this country, so that's okay. Well, maybe he can arrest you, but not the rest of us.
But
Hi everybody, good afternoon, and thank you so much for being here. Actually, Hormoz is correct. I do reside in the United Arab Emirates. However, I actually started my career in Cyprus. So Kalamira to all of you. It's been 12 years ago that I moved here, and actually I'm very thankful for this event today because it's my first time in Limassol in Cyprus now for just over 5 years. But actually my career started in Cyprus, and then I moved to the United Arab Emirates. My name is Shabir, and I'm the chief analyst at GTC, and I can't wait to discuss everything with you now.
Excellent. Michalis?
Well, I'm again the boring one on the panel. My name is Michalis, and I am chairman of the Fiscal Council of Cyprus, and I reside and work on this island.
Excellent. Well, I'm going to delve into this quickly. I've written down some questions. The first one is about, just go straight to it, oil prices and all the events that are happening, and oil and its impact on inflation. Years ago, oil used to be this big thing for inflation. I'm not sure, does it have as much impact on inflation these days? I know maybe from a Dubai perspective, Ahmed,
Yes.
what's the oil story? I know huge impact on us in UAE.
yes, once it's come to energy in general, oil specifically, it's the oil price is, and will stay the main or the global inflation amplifier. As the oil is the main component for the main manufacturing, for the logistics and transportation. So any raw material, any product get affected by the change and volatility of the oil price. So it is a fact. We cannot hide behind it. Nowadays, the oil price ranged about $75 per barrel. The price increased almost by 10% within the last few days based on many factors. One of the main factors is the current situation is going on in the Middle East and North Africa and Red Sea as well. Other factor is the limited supply by the OPEC Plus members, and also the increased demand by India and other Asian countries. All of these factors playing a great role in increasing the oil price in the recent few weeks and days. So once we come to the oil price and its impact on the inflation, we should differentiate between the importing economy and exporting economy for the oil and the energy in general. The Europe country characterized by a sticky energy inflation. It gets affected so easily by the volatility and the change of the energy and oil price. But once we come to the MENA region, we have to differentiate between the different countries in the MENA region. The GCC area, the GCC countries, considered as an exporter of the oil and energy. That's why the increase of the oil has a positive impact on their economy and the inflation rate. That's why we observe that the inflation rate in the GCC country is ranged between 2 and 2.5% year over year.
Yeah.
While other countries in the MENA region, specifically the North Africa, such as Egypt, Morocco, Tunisia, they suffered a lot as a result of the increase of the oil, since they are an energy and oil importer. So it gets affected in the trading balance. The trading balance gets affected in a negative way. Also the devaluation of the currency also get affected. But once we come to the importer emerging market, the inflation is imported from the advanced economy, because most of the raw materials, most of the product they rely on in production in their daily life is based on the price of the oil and energy in general. So yes, oil price has a great impact on the inflation, and it was having this impact, and it will still having this impact, since there is no other alternative, I mean real alternative of the oil as a source of energy in general.
Michalis, you guys have oil here in Cyprus. You have found some, I think, right?
Well, I always say first time I heard of natural gas reserves in Cyprus, I was in elementary school. And the first time I discussed it, I was wearing shorts and playing soccer, playing football in the middle of the street. So our discount, I mean, as a fiscal council, our discount on LNG discoveries for Cyprus is 100%. We'll factor it into our estimates when we actually see it. And
so you're a net user of oil, essentially.
We're an absolute net user, and I mean, I completely agree. Oil is the key amplifier, the main amplifier of inflation. It's still a little, the spike after the war in the Middle East started. It's not quite there yet. We do have increased production in some part. The U.S. in the first Trump administration went into fracking, and seems very. The American administration is trying to push businesses to increase the production, even though businesses seem to be more reluctant than the government to do so. The dollar, the small but substantial dollar depreciation has helped a little bit. So we're still trading at $75 per barrel. It's not where it used to be in 2022, for example. That being said, we're talking about how things are today. Tonight, the picture could be a little bit different. Everybody is discussing the question of the Straits of Hormoz. We are discussing trade disruptions and other amplifiers of inflation through supply chains. But the big question is OPEC, and how far Iran might be willing to take the situation, and whether the Fed might oppose the depreciating route of the American currency as well. So we still have a lot a lot of questions, a lot of opacity in what's happening. I would say, based on some of the futures, it's by the end of the next couple of months, it goes to 80, 82.
Jamil, I feel like it's the oil is a little bit cheap still, don't you think? It's pretty low inflation based. wise, like inflation-adjusted price of oil feels low.
I would just add something to Mihalis very quickly. There's an old saying in Cyprus, cigar, cigar. So I think he means slowly, slowly in terms of the gas reserves. Look, if let's take the GCC view, or where we reside specifically in UAE, and then the global view. Firstly, in the GCC and specifically our Emirates, which is Dubai, the UAE benefits from any global uncertainty. So it's not just about government revenues and dependence on oil and so forth. If you look at the historical context, all the way from what happened in Iraq 20 years ago and Afghanistan and so forth, even the Eastern European crisis of 3 years ago, of course I'm talking about Russia and Ukraine, the numbers that flow or flock into the UAE causes the prices to surge, everyday living costs. So that's why in the UAE, actually, to be contrarian, any global uncertainty is seen as an opportunity. If you look at the sovereign wealth funds and the government revenues, there's less dependence on oil now, but yes, it's still significant. If we now take the global view, yes, oil prices are cheap considering how fragile the situation is, and I still don't think all of the different outcomes are being priced in. Specifically, that the US president did leave the G7 meeting early yesterday, and you saw the statements that come in overnight about unconditional surrender, and of course, that's the Trump tweet element that comes into it as well. Talk big, but reality could be somewhat different. But yes, the situation is uncertain, but anybody living in the European Union now will tell you that the Russian-Ukraine crisis caused the inflation shock that central banks are still only just starting to cut interest rates with.
Yeah, but by the way, like Ukraine issue and also this Iran issue, doesn't look like they cause a recession, global recession. I thought the Ukraine and Russia issue would cause a global recession. And maybe this war here, but it looks like the world can handle things quite well, actually. You know, it's not as bad. What do you think, Jamil? Like or will we see, if oil goes above 100, are we likely to see a big recession globally and all that?
No, I don't believe in the clickbait words like global recession and so forth. If you're actually looking at what the institutions are more concerned about right now, it's global trade tensions and trade tariffs. You have the institutions including the OECD, the IMF, the World Bank, the World Trade Organization.
So the Trump tariff is more of a threat?
At the moment, yes.
The China trade war, that?
It's not just US and China. What I always say is, if you look at the first presidency, again, we're in Make America Great Again version 2 now. Version 1 was nothing. Version 2 is on steroids compared to that uncertainty that administration brought between 2016 and 2020. However, the issue here now, if we're talking about the economic concerns, of course, institutions worry more because they're forecasting that perhaps Trump's in it for the long game. As you're seeing, as time passes, Trump's actually reversing and rolling back some of these tariff concerns. Nonetheless, I would look at that as the number one threat, but this situation that's coming out very closely to this area now in Cyprus as well, that's something that we cannot undercook.
Ahmed, what's your view on the Trump tariffs and China thing? It's not in the forefront anymore right now. It's not in the news much.
Yes, but we have to consider this trade war. It's not a recent trade war. Actually, it was since 2018, at the first presidential term of Trump. So we have to go back then. But the difference is how the China responds to the US trade threats. In 2018, China response is completely different if compared to China response in 2024 or 2025. China learned the lesson. It get prepared to respond in a very strong way to such threats from Trump regime or whatever the regime is going to do, because they learn so quickly. They know exactly how to handle the reverse engineering. They get what they experienced in 2018 and they apply it in 2025. Now China is standing very strong, facing the situation face to face, body to body, and even the current negotiation happening nowadays in London regarding the reaching an acceptable tariff rates, China standing very solid in front of the US. If we have a quick glance on the volume of trading between China and US, we will find out that the US is exporting around $150 billion on annual base of goods and products and services to China, while China is exporting around $450 billion to the United States, which means that the United States is importing 3 times what it's exporting to China. United States thinking that they have the power hand or the upper hand once it comes to the tariff rates. But the trading is not going in this way because there is a lot of factors should be considered once it comes to applying the tariff rates. And the announced idea or announced principle about these trades from the United States and from Donald Trump to make America great again and to nationalize the manufacturing process, maybe somehow it's correct, but there is other factors the United States try to control, such as controlling the exporting of semiconductors and artificial intelligence technology, putting some pressure on a specific industries such as quantum computing. They would like to control the expansion of the China. China response is completely different. And this trade will affect the growth of the world GDP. Based on the World Bank, the annual GDP will get reduced by 1% on annual basis to 2030. So this war, the main loser is the whole world. However, there is other winner of this war. Specifically, we talk about India, Mexico, and other Asian countries because of the shifting of some companies to reallocate the logistics and reallocate the manufacturing to other countries. So there is other winner, and UAE and Saudi Arabia as well. In somehow they are benefiting from this trade war.
Amazing. Jamil, anything to add on the China trade war thing?
Look, the mainland China stance might be a little bit less emotional now compared to Trump version 1, but as somebody who regularly visits China, and I've spent around 1 year of my life in China, between 2014 and 2024, I can tell you the China economy is very concerned about what's happening. And if you do visit China, those on the street will also tell you that mainland China has not recovered from COVID yet. The pandemic and the impact that had on the economy. Times Square in Shanghai still does not have the occupancy anywhere near what it was pre-COVID.
Wow.
So many are still working remotely. Many are still not in the tier 1 cities because it's cheaper to live in the tier 2, the tier 3, or I can say it here, the ghost cities, and to no longer do those commutes. But of course, China's concerned about what's happening.
Yeah.
The reason why there's less focus is, again, Trump is extending trade battles across the field. And by the field, I'm using the metaphor, so many different economies at once. Yeah. Whereas between 2016 and 2020, specifically between 2017 and 2018, it was very focused on China. But do not forget, in that year, we also had the weakest year of global growth since the beginning of that decade, which is when the European sovereign debt crisis was a tremendous talking point. So we're not undercook again that we shouldn't say that the trade tariffs are not causing a problem. The issue at hand is that we don't know how serious the US president is about playing the long game. And again, if we go back towards Liberation Day in early April, we saw that very famous whiteboard. It was a chalkboard actually, and all of those tariffs since then have been reduced dramatically. verbally, yes, the Treasury Secretary and so forth are still threatening additional tariffs if you do not take negotiations seriously. But if you look at the institutions too, they are all saying the same things. These tariffs are going to impact the United States economy more than anybody else.
Amazing. Michalis, any thoughts on this China?
Well, China has been finding it increasingly difficult to, first of all, to hide the immense local debt, local government debt, and in general the stock of debt that's internal in the market. I agree that the growth of middle class is sort of stalling. Now we're talking about China, so it's stalling. We're still talking about several million people joining the middle class. And thirdly, the demographic pressure is beginning to show. Beyond that, one important point is that the trade war is largely a monetary question as well. And for a long time, analysts kept saying, there's this mutually assured destruction between China and the US, China holding, I think it is something like 14% of American debt. They can destroy the dollar anytime they want at the cost of the RMB. But the bizarreness of this situation now is that the US president wants a depreciation of the dollar, so that weapon has been annulled. It is a monetary question, and that raises a lot of questions for the ECB and possible dilemmas. And I think it's also always important to remember that I said this morning, in 10 months, or 9.5 months, the American president will appoint a new Fed chairman. The independence of the Fed is one of the key anchors of the world economy. I'm sorry, I am a fiscal counsel, I think in terms of institutions. But whenever we talk about a crisis, and a crisis will come one way or another, it's just part of the cycle, everybody looks to the Fed and the IMF for solutions. The Fed's independence is under direct attack, and the IMF, American support to the IMF is very vocally and clearly conditional on a number of things. So I would be more worried about the decay of the stable institutions of the world economy. I would say it's a critical time for institutions like the ECB and like monetary authorities, even in Japan, for example, to start thinking actively about the role of their currency as a key reserve. The dollar declined from 72% to 58%. The euro did not take part of that pie. It's stuck hovering around 20. We had some statements by Christine Lagarde a couple of days ago about this issue. Crypto has replaced even gold as a reserve, as a haven in times of disruption. So in the interest of not abusing any more time, I would say I would keep a very close and worried eye to world institutions, the major central banks out there, especially the Fed and the IMF, which
and in a year we will have a new Fed chairman, is that right?
In a year we will have a new Fed chairman. The US Supreme Court has provided reasonable, not foolproof, but reasonable protection to the independence of the Fed with its decision last month. But we know the US administration wants to replace the chairman. If they can't do it through the courts, or if they can't make it through the courts, his term of office is done in 9.5 or 10 months, and then we will have a new Fed chairman. That name, when we look at that name and we figure out who he or she is, we will know how the world economy will move.
That's in 10 months.
Or how the safety net of the world economy, or how solid the safety net of world economy is. So that's a key moment in all of this that we just have to sit and wait. See what
Speaking
happens.
of the Fed, can we do a quick survey of thinking what is the interest rates going to be from maybe now to 10 months from now? What do you guys think the interest rates in the US and Europe, will they be going down steadily now, or will they go up, or what's your thoughts? Maybe Ahmed, start with you. What do you think is the European and US interest rates policy looking like?
Yeah. In fact, yeah, the central bank in general, they try to keep the interest rate high to control the inflation. This is the most idea and most the main principle for controlling inflation. The main tool is the interest rate.
And is the interest rate high in your opinion right now? Like, is it quite high?
It based on the area. In Europe, for example, the interest rate is 2.15% now. They already cut. It's compared to other countries, it's quite low. Compared to the United States with 4.5%, it's quite low. It's quite high. It's quite low compared to the United States. But compared to the history, it's still high. But European Central Bank start to cut rates. The Fed didn't start to cut rate as expected till now. However, the market pricing the assets based on cutting the interest rate in the coming few months. So it's expected for the Fed to cut the rate, but little bit slightly, not in huge figures. If we go to the GCC area, the situation is different because they rely on the Fed interest rate because the currency is pegged to the dollar, so they have to follow it. However, the inflation rate is not this much high compared to the US. And in the US as well, the inflation rate start to calm down. It's now ranging between 2.5, 2.8, which sound acceptable. However, it didn't reach the level which is targeted by the Fed with 2%. But they are doing well. That's why I believe in the nearest future, there will be a cutting rate on all over the world, starting from the US and Federal Reserve, moving to the Bank of England, where they have now 4.15% interest rate. But because of the high level of inflation, because of the housing and transportation and all of that, that's why they keep the interest rate in high level. But the market pricing all of the assets based on cutting interest rate within the coming 6 months.
Jamil, what's your thoughts on the interest rates here? You agree it's going to be lower?
Yes, look, European...
And it's already low in my opinion.
It's low compared to other, let's say, nearby economies or major economies. But look, the European Central Bank have already cut interest rates half a dozen times or more over the past 18 months. I do expect they're going to likely cut interest rates up to another 2 times over the remainder of 2025, considering how active they've been. The issue is that the European economy and the Eurozone is still stuck in the mud. It has not recovered from that event in the early 2010s that I mentioned in the previous answers, which is the European sovereign debt crisis. But the action really is going to be what happens with the Federal Reserve. Just speaking and following up about the nomination, do not forget that the US president did actually nominate Jerome Powell during his first presidency. So yes, while who he nominates moving forward is going to be interesting, I think the Fed are likely to cut interest rates over the second half of 2025 anyway, potentially as early as August. However, the states of play could change considering what stance the US administration take on what's happening with Iran.
I think Michalis, your thoughts on this, but the interest rates are low and going lower. And I think for gold as well, this will mean that the inflation might show its face again and gold might go higher based on this.
Could be. I mean, this strange situation we're in right now is that an orthodox economic decision is not on the cards. Again, in the US, I agree. We're looking at least 2 more cuts. I think maybe the ECB will limit itself to 1 more cut. For the ECB, the question is, can we bring capital from the US flow to the EU. That seems to be happening even now. Inflation rates are okay as far as the ECB is concerned, but it's also it's an FX question relating to the dollar, not just an inflation question. The European economy is stalling and needs a boost. Unfortunately, the main solution that European governments have found is to boost sovereign debt and accelerate deficits, and that could bring a lot of problems down the road. I think the question, again, for the Fed, it's not so much an economic policy decision as it is a question of how much can the current chairman, the current Fed, resist the pressure from the White House. Under normal circumstances, I agree, we would be talking about a couple of more cuts across the board, both in the US and the EU. And the same picture more or less in the UK as well.
Interesting. I'm going to move on to another subject now. The cryptocurrencies, the stable coins, and the central bank digital currencies. Ahmed, what's your view on that? Because is it good for the economy long term to have all these central banks controlling completely how money is spent with a digital currency that's micromanaged in everyone's phones and wallets? Is it going to be a good thing? I mean, you might think, yes, it's happening anyway. Doesn't matter what I think, it's happening no matter what. They're going to completely control what's in the digital wallets in 10 years from now, maybe all the central banks. What's your thoughts on that?
Actually, central banks has no other option. They are facing one of the main competitor in nowadays payment solution, which is stablecoin. Stablecoin we have nowadays, we have stablecoin backed by physical assets such as gold, other stable cryptocurrencies or algorithmic stablecoin. So, and stablecoin become a very significant player in nowadays payment with the very fast outboard transaction, very cheap cost for the transaction, and also the high level of transparency. So it's become very amazing and very strong competitors once it's come to the payment solution. So today's the market cap of the stablecoin is around or more than $250 billion. The amount of the transactions processed by the stablecoin in the last year only is more than $25 trillion, which is more than the total transactions done by the Visa and MasterCard combined together. So no other solution by the central bank to handle this situation. So the only solution is the central bank digital currency. Central bank digital currency is considered from the perspective of the government, from the perspective of the central bank, is an alternative to this strong and this high competitor solution and high attractive tools for the payment. So the central bank digital currency now is considered by more than 130 countries. More than 60 countries are in advanced level to issue their own central bank digital currency. However, we have nowadays some countries issued their own central bank, the CBDCs, such as Bahamas, Nigeria, and other countries. So we are in advanced phase. In UAE, for example, the central bank announced that they're going to issue their own central bank digital currency by the end of 2025 or beginning of 2026. So now we cannot run away.
Is it good for the economy?
You know, sometimes it's not a matter of good or bad. It's a matter of fact. It's happening. However, it's from my own perspective, it's very good for the economy. It will accelerate the transactions. the cost of the cross-border transactions and payment is at the minimum. The time elapsed for making these transactions is almost zero compared to our traditional payment and our traditional money transactions. And however, the CBDC is not applicable at the moment for the individuals and for the B2B transactions. It could be handled the interbank transactions and financial institution transactions, but in the coming future, it will have a great role in such sectors.
Yeah. Jamil, what's your thoughts on it?
Just very briefly, it's about controls, and actually I will take the example of the metaphor of China once again. If you do visit China, you will know that it's already a cashless society, and everything that you do, from communications to what you pay for, is monitored on WeChat. So the governments and the central bank know everything you're purchasing. The only places now in mainland China where you can actually use cash is maybe a Starbucks, a McDonald's, the occasional kiosk. But even from my visits to Hangzhou last year, you can no longer pay for cash in a taxi. So it's about control.
Interesting. What's your thoughts, Mikhail?
I mean,
It's got bad elements clearly, but
there's some bad elements clearly, but I think that it's a little bit, the way we talk about the black economy or the informal economy is a little bit the same way we talk about cryptocurrency, in the sense that in formal speak, it's something you don't want. The reality is that it lubricates the economy, especially on a B2B level, and especially on smaller transactions and smaller, people who are still, less developed areas, less developed businesses, and that it plays a critical role. It's growing. I think most of us bought Bitcoin or some other crypto. I doubt that many of us used Bitcoin in a transaction. And the problem there is when you no longer have it, it can no longer be used as a store of value or a unit of account. Then it doesn't fulfill two of the three requirements of the definition of currency to begin with. So I think we're at a point where central banks, I agree, they have no choice, they have to proceed. They're already very late. Crypto assets are good for the economy up to a certain level because they lubricate the wheels. There's less friction, they're faster, they're cheaper, but definitely wouldn't recommend it as a store of value, and it can be used as a unit of account. So
we're running out of time, so I'm going to do one final question, I think. It's a small country, Cyprus, isn't it? One point something million, very small. The biggest country in the world, India, isn't it? Their prime minister is here this week. Why is that? Jamil, what's your thoughts on that? Why is Prime Minister of India, Modi, here? And is he on his way somewhere? There's something going on here, huh?
Considering we only have 90 seconds, I'll be very brief. It's a photo opportunity, considering what happened last month between India and Pakistan, and also taken into the historical context of Cyprus, that's who was supporting Pakistan during that very brief conflict. Nonetheless, if we talk about economic matters, the forum that took place yesterday in Limassol does suggest that there will be a free trade agreement between India and the European Union at some point at the end of this year. But ultimately, this is a diplomatic photo opportunity.
Khalis, any thoughts on that? Yeah.
I think I largely agree. After the last episode between India and Pakistan, Pakistan has been very vocal and very clear and very visibly supporting, giving a lot of trouble in terms of visas and entry requirements and permits to European and in at least 3 or 4 cases Greek interest businesses. Pakistan is aligning itself with Turkey. There's a lot of geopolitics there. Cyprus is completely inconsequential for India, but I think it's a signal of how the realignment if you want to be a little tongue-in-cheek, a new Silk Road is developing. I think it's about drawing lines on the map, and Cyprus is on the way to the heart of the EU. That's the main point. Again, Pakistan has aligned itself towards Turkey and a little bit towards Russia, and the blocs are beginning to clarify as to how the post-World War situation is aligning itself.
Great, thank you very much. I think that's all we have time for, and thank you to the panelists. Thank you.
Thank you very much.
Thank you.